What is up, ladies and gentlemen? And we're back again with another recap. Today we are up $516 trading NIVF, MLEC, and AGBA. So, all things considered, pretty decent day. I don't think today was really that hot. We did have some few opportunities, so I was able to get some decent green. So I'd say this is a nice sort of base hit kind of day. I'll definitely take it for what we got. We can take a look here. The pre-market stocks were MLEC and NIVF. So MLEC had a very nice pre-market chart. So early in the morning, starting at $1.40, grinding its way up to $3.30. At the open, I thought this looked pretty decent. I did jump in, try to get the opening surge, but I did get flushed on a little bit. Whatever I made on this candle, I gave it back. And then we jumped in for the break of the opening range. So the opening range breakout. This is an opening range breakout. So we set the high and we set the low for the day. And then the next trade after that, if it's not an opening surge, or if you're going short, we're not continuing lower. We set the high and the low. You can either look for the breakdown if you're going short, or if you're long, you can look for the opening range breakout. In this case, we did get the opening range breakout. I was able to capture some profits, but I was up about maybe 150 or so, and I was looking for the break of the highs at MLEC. We didn't end up breaking the highs. We ended up pulling it back in a very nasty pullback, trying to buy dips in this area, trying to buy dips in this area, and it just kept falling through. I was able to keep my risk pretty tight, so I only lost maybe like $100 or so, I think, something like that. But finishing small green, up only $12 on MLEC. So I was up close to maybe 200, and then gave back to pretty much flat. So back to flat on the day. On MLEC, and then we got NIVF. NIVF was halted up here at the open. I knew that this one had potential. However, I did like MLEC for the opening surge, which we didn't hold highs. And then I saw NIVF about to halt up. I was able to get in right before this halt on NIVF. And we opened up, I took my profits, then trying to now get some continuation moves. I did chop around in this area, very tough to time. We did halt up again, very choppy up here, and I gave back most of my profits on, I think, coming down. I was not stuck in the halt, but I was looking for a hold of this pre-market high in the previous halt level, so I was buying on this dip, and then I sold as we broke down. But still small green on NIVF. I think I gave back a little bit. I probably, if I would have just held this entry here from 130 up to 170, I probably would have done a lot better, but it's just not how I trade. It's harder for me to manage my risk with that hold time. And I seem to be consistent trading the way that I trade, trading the strategy, the proven strategy that's been working for me. But yeah, if I would have held that, definitely would have been better. Maybe next time I can scale out, maybe a little slower, instead of taking it all out at once. But anyways, AGBA was the next one that jumped up. AGBA breaking out of Friday. So Friday we had, this was the main stock here on Friday. It was really slow on Friday, but I was able to get profits on Friday at the opening surge. And then we consolidated very nice. Oh wait, no, this was a mover from Thursday. So Thursday we gapped up. We failed to hold highs. We came back down lower. Gapped up again on Friday. Could not hold highs or break out, consolidating. So sort of like a cup and handle pattern, as you can kind of see here on the multi-day time frame. On the 5-day, and then forming higher lows, higher low, higher low, higher low, And I guess this one's not really that much of a higher low, but then this one's a higher low. Then we have our first higher high, higher low, and then boom. We got a nice move here on AGBA. I was able to get dialed in. Even though it was a very tight range, it didn't move that much. I still was able to scrounge up $388 on it, which is pretty decent. I think in this area, this is when I started trading it. So we rejected the highs, rejected the lows, and then started to reclaim the previous breakout level, which then I got long, selling at the top of this candle wick, and then kind of actively trading it in this area, then kind of let it go as it did dump down a little bit too much for my liking. I did want to see it hold high and continue higher, but we formed a 5-minute pullback, longer consolidation. I think I got chopped out in this area on these topping tails, and then we curl back up. I can probably open this up here for you. So we curl back up, and then this is where again I start trading it actively, looking for that breakthrough 2. Got a nice breakthrough 2, and nice pullback here to the 9 EMA. This is our classic ABCD pattern, by the way, on this chart, on this 5-minute pattern, or 5-minute bull flag, 1-minute ABCD. And so as you can see in the 1 minute, so this is the 1 minute, we have our A, we have our A here, we have our B, then we have our C, and then we have our D. And then if you look at the 5-minute chart, this should be a bull flag. And yes, this is a bull flag here on the 5 minutes. So that's why we call it 1 minute ABCD, 5-minute bull flag. So here's that same pattern here that we were looking at, the ABCD pattern. But on the higher time frame charts, it is a bull flag. I don't know why my auto is auto drawing. It should be this one. So bull flag. Very nice continuation move there. And after that, once we put in the high here, this is where I started to walk away. We're getting to late morning, and it wasn't that much of a hot day. You know, I could have sat down and tried to maybe pull out some more trades, some small gains here on this leg at 12 o'clock. But we're starting to, at this point, we're starting to get into a time frame where I don't perform as well. As far as, you know, I'm a little bit more fatigued from being up and focused for a couple hours now. Maybe I'm getting a little hungry. Maybe I need to shift my eyes away from the screens. And maybe there's a little bit lighter volume. Usually it's a little bit lighter volume. Yeah, definitely better volume here in the first few hours versus midday. So all that kind of contributes to a lessening, a decrease in the edge that I have in the market. Well, yes, maybe I could have pulled out $100, maybe $200 more, or I could have given back money. Who knows? Could have given back money. I also have to consider that I'm already 377 orders on the day, and the limit is an average of 390 per day. So I'm already getting to like the order limits on the day when the day isn't even that hot. So it's another thing to consider whether or not to continue trading as well. So taking that all into consideration, I walked away at 11 a.m. Don't regret it. And I went for a beautiful walk. It's a beautiful day out, sun shining, not a cloud in the sky. Had a great walk, enjoying my day, and that's what trading can offer. You know, a little bit of flexibility, a little bit of freedom to enjoy your time when you want. Managing your own life, not having somebody tell you where you should be or where you shouldn't be, and when you can go to the bathroom and take your lunch break, and when you need to be back at the desk. And I wanted to enjoy a little bit of freedom, you know, a little bit of freedom. So AGBA, is this thing going to continue higher? Let's see if there was any fresh. I didn't even know if there was fresh news on it. Actually, I just was trading the price action, but it doesn't look like there was fresh news on it. This was that same stock that had that merger agreement with Triller. Triller is some like social media company that nobody knows about, which they were trying to pump the stock again on Friday with recycled news. So this looks more of like a technical breakout, just on technicals, nothing really driven by news. Probably some stuck shorts in this area at the highs here. Yeah, so definitely some stuck shorts between probably 140 and 170 or 165, 140 and 165, kind of fueling this move. I don't really think it's going to go much higher, to be honest with you. I don't think the catalyst is that great from a few days ago. I think it's just technicals that shorts are just pushing this a little higher. But it should come right back down. But who knows? Who knows? I'm wrong pretty often. So, I mean, 50% of my trades are red. So I'm wrong pretty often. So you can't take everything that I say as exact. They are all just recommendations or my opinion. They're just my opinions on how I see the market. But let's take a quick look at the statistics and then we'll wrap it up. So let's take a look at first the running P&L. So the running P&L, I did give back, sometimes during the day, some decent profits. So you're going to see a little bit of a choppier running P&L. So, early in the morning, getting up to about 117. I think it was higher than that. I don't know why it's not showing. Then back down to flat. And this was at 9:31, 9:33. Okay, still early in the day. We can still get something going. And then we had NIVF pop up. All right, back in the driver's seat, up at almost $200. Then we give back 100 off the top. 100 on NIVF. Now we see AGBA. Start pulling away here on AGBA. Looks like, I'm not sure what happened here, but I gave back another 100 off the top there on AGBA, which we will review in the film later today. Not sure what happened there. And then curling back up to plus 500. So pretty okay day here, all things considered. Nothing super crazy. Giving back $100 in any sort of day or any sort of range in my P&L, like up or down $100, is kind of just like a small trade, scratch trade. I don't really sweat it. It's when I start having one trade or a series of trades where I go deep, like $300, $500, $600, $700. That's when it's like, okay, red flag. But it's normal for me to kind of have these ranges in my P&L where it's like plus or minus 100. It's really not a big deal. But like I said, if I start having ranges of like $500 and the setup is terrible and the market day is terrible, and I'm like, I'm grinding my way up to 500 and then just in one trade, just like a flush in my P&L back down to flat, that usually means I made a mistake. Usually my P&L isn't like that. So, but today was pretty clean. We can take a look at the statistics. So far, this month has been pretty decent. We have a nice 4, 5, 6 more days. 6 more days of the month. So I didn't think that this month was all that hot, but we did have some opportunity. So after fees, just under 500. My largest winner is only $113. My average position cost is pretty small. Usually on these smaller price stocks, my average position cost is going to be a little lower. NIVF was $1 a share, and AGBA was $1.50 to $2. And the other stock didn't even. MFEC, was that MLEF? I honestly forget the ticker name already. Sometimes that happens. MLEC. It's kind of scary. But yeah, MLEC, $3 stock. Yeah, usually when I trade smaller price stocks, it's understandable that my average position cost is going to be a little bit lighter because I don't really take as much bigger share size. Even though this price is smaller, it doesn't mean, let's say, 1,000 shares of a $10 stock doesn't mean that I'm going to take 10,000 shares of a $1 stock. Even though that's the same amount dollar value, $10,000, 1,000 shares of a $10 stock is $10,000, and 10,000 shares of a $1 stock is $10,000. I'm not taking 10,000 shares on a $1 stock. It just seems like the dollar stock can move up and down 10%, so much faster than a $10 stock moving up and down 10%, which is why it doesn't equate to 1-to-1 as far as changing my average position cost or my share size between different price stocks. It's much more of gauging, okay, is this stock thickly traded? Is this stock thin? Is this spread wide? How's the ranges? The range of the consolidation, $1 a share. Sometimes the ranges of a consolidation is $1 a share. Sometimes the range of the consolidation is 5 cents. Those are things that can take into consideration with what share size you're going to take. Even some stocks that are both $3 a share. Let's say there's 2 different stocks, they're both $3 a share. One of them could be really tight, really thick, 1 cent spread, and really thick on the bid and the ask. And in that situation, it's going to pay off to take a little bit bigger share size. Maybe in that case, you do your 3,000, 4,000 shares to get up to your $10,000 position size. And then in some cases, some $3 stocks are going to be, there might be like a 3 cent, a 4 cent spread, a 5 cent spread. The range of the consolidation may be like 50 cents. The fills might be a little bit more so on the ask and the bid versus getting, since the spread is not tight, you won't be getting as reliable fills as far as the price that you want to get in. What else? Sometimes like the level 2 might be a little bit thinner, maybe not as much liquidity. And in that case, maybe for that stock, you don't do the same amount of shares that you would take on that other $3 stock, because inherently the risk may be a little bit bigger. But also, if the market's hot, that type of stock is going to be the one that gives you more reward, more potential for reward, because it's thinner. There's a little bit of a spread. So even though, the spread can work with you and also against you, with the bigger spread, it can fly a lot faster. It can skip 10 cents, 20 cents a share, 50 cents a share at a time. If it's really thinly traded with a low float, and the potential for profit's a lot bigger than something that's real thick, a 1 cent spread with huge lots on the bid and the ask. But those are all things that take into consideration with whether or not, with what kind of share size you want to take. But it's never black and white. It's never black and white. Every single stock has its own personality, it feels like, even from day to day. Like AGBA today was not moving like the AGBA on Friday and Thursday. Stocks change, days change, personality of these stocks change all the time. And even just because, like, let's say, one stock a year ago, let's say I made like my biggest day ever, and let's say it starts gapping up again today. Doesn't mean today is going to trade similar to that day. Doesn't mean today I'm going to be the same trader I even was that other day last year. And in all those situations and all those variables, I may not perform as well. It may act different. The personality of that stock may be different. There's different market makers than there were last year. There's different traders in the game. There's so many variables that change from day to day, from moment to moment. You can't really take everything from the past to say that it's a guarantee. It's a guarantee. Just because I had a huge day on this stock last year doesn't mean today I'm going to have a huge day on it today. So those are a little bit of pointers that I can give you guys with my experience. But yeah, that's why I usually like the mindset of just taking it day by day, taking it moment by moment. Yesterday isn't today. Today doesn't mean anything about the future. And so a lot of the times, like, we'll have one really hot day and the next day will be cold. And some days it'll be really cold and the next day will be super hot. So, if you just take it day by day, setup by setup, moment by moment, you'll usually be able to stay alive, not give back so much profit, not have blowout days, and stay consistently green, and not have any preconceived notions of how the market should be. Just taking each setup as it is, and in the moment making your decision based on the years of experience you have under your belt, and trusting your risk management skills. And if you trust your risk management skills, it really allows you that freedom to make that decision in the moment versus overthinking it. A lot of times we overthink stuff, overthink setups, because we don't believe that we're going to cut the trade, or that we're not going to get out at the right moment, or that we're going to get in at the right we're not going to get in at the right moment. But if you can trust your risk management skills and your the areas where you're going to enter the stock, if you can trust that, then you can kind of let yourself flow in the moment. And when you let yourself flow in the moment, you can make the right decisions at the right time. And then that's how you get nicely green. That's how you make the great decisions. It's like not overthinking it. You're just like in the moment and you see it and it just feels right, and you take the trade without any interference. And those are like the days that are the best. Those are the days that are the best. So up today, $516. Pretty happy. Gonna enjoy my freedom. Gonna enjoy the day. There's some beautiful weather outside. I'm gonna hit the gym, go for another walk maybe, enjoy the sun, and I'll catch you guys tomorrow. If you guys are still watching, hit that thumbs up button for me. Hit the subscribe button if you're new. Like I said, once we get to 1K subs, we're 14 subscribers away. 14 subscribers away of 1K subs. When I get to 1K subs, I'm publishing my $3,000 trading archive on YouTube, so you guys can have that as a resource. So almost there, 14 more. Hit that thumbs up button for me on the way out. Check out the links down in the description, and I'll catch you guys later. Peace.